With tax season underway, there are new federal tax changes that could impact many households this year, including expanded deductions and higher SALT limits. Our president, Joseph Eschleman, recently joined Walt Gray on ABC 10 to talk about what these updates mean for taxpayers and what people should be thinking about before the April 15th filing deadline. Let's take a look at that conversation.
Most of us have been getting tax statements in the mail from Uncle Sam, W-2s, 1040s, 1099s. The date to file, as always, April 15th. There are changes this year. Some are most of it due to the president's big, beautiful bill. Joe Eschleman from Towerpoint Wealth is here to help us figure it all out. Joe, welcome.
Thank you, Walt.
There's now a higher standard deduction and revised tax brackets. How much does this help and who does it help?
Yeah, understanding we are in the joy of tax season, put that in quotation marks. People are much more aware of what they may be paying Uncle Sam. What happened in 2017 is the Tax Cuts and Jobs Act of Congress increased the standard deduction, which most families are now taking. That was set to go away at the end of 2025. With the new One Big Beautiful Bill Act, that now this higher standard deduction is in place for the next few years. For ABC 10 viewers, what that basically means is less taxable income that they're paying income taxes on. This standard deduction for married filing jointly couples, as an example, is north of $30,000. So now couples have $30,000 of a standard deduction that they're paying less tax on.
So there's also now a limit on the state and local tax deductions. They call it SALT, I guess.
Tax, right.
How much of a deduction in that?
This SALT deduction used to be capped at $10,000. That deduction now has been increased to $40,000, meaning especially for people who live here in California, the general Sacramento area, they're generally paying higher state taxes, obviously with California, in some cases local. In addition to that, mortgage interest is lumped into this SALT tax deduction. Last year, this was capped at 10, now it's at 40. Again, much less in taxable income based on this deduction that they're able to use.
State of the Union last night, the president did mention taxes on tips and overtime, and also auto loan interest now greatly reduced. Who does that benefit? Yeah,
well, the interest itself isn't reduced, but any American-made vehicles,
right,
and you're taking a loan to buy one, you're able to deduct up to $10,000 in interest that you're paying on those loans. So when you add that in addition to those who are working overtime and or earning tips, anything up to $25,000 in overtime and tip wages are potentially tax deductible as well. So a tremendous opportunity to save a lot of money.
President also mentioned about saving for your child's education. Some tax benefits in that?
Yes, these Trump accounts that we're hearing more and more about.
Which he says he didn't name them.
Well, he's taking credit for it one way or the other.
Yep, it wasn't him.
Yeah, but it's just an interesting way for parents to save on behalf of children. There are other types of accounts like custodial and 529 accounts. With these Trump accounts, what's happening is they are able to save up to $5,000 a year. For those children born between 2025 and 2028, the government is going to seed these accounts with another $1,000. The nice thing about the Trump accounts is they don't have to be used for education necessarily. So once the child turns 18, that's when you can begin to take money out of the account. But you know, you want to have a down payment on a home or start a new business or whatever the case might be, a Trump account would be a good way to do that.
Use as you see fit. We know that the tax credits for electric vehicles, solar, all of that is being phased out, already has been phased out.
Correct. Yeah, it doesn't mean these things aren't good ideas to potentially implement as far as energy efficient home improvements, buying an EV. Unfortunately for ABC 10 viewers and obviously those throughout the country, having a tax credit associated with making those purchases or investments are no more. So while we've highlighted 4 opportunities to save some money on tax, in this particular case, again, not a bad idea to go buy an EV or to make some energy efficient home improvements, but don't count on any tax help.
Good idea. You just won't get some breaks from Uncle.